Good evening, everyone. I'm Councillor Yvonne Say and I'm the Chair of the Pensions Committee and Board. Please note this meeting is recorded by the Council for live and subsequent broadcast on the Council's internet site. Following the sad news of the passing of the Queen and during this national period of mourning, I suggest that we pause and observe a moment of reflection before proceeding with the meeting. So I'll pause for 30 seconds. Thank you. I'll begin the meeting by asking members to introduce themselves. If we can start.
Councillor Nick DaCosta, member for Highgate Ward.
Councillor Ty Curran, member for Woodside.
Councillor John Bevan, Vice Chair, member for Northumberland.
I'm Mark White, Councillor for Tottenham Central Ward.
I'm Councillor Tammy Hymas from St Anne's.
Thank you.
Keith Brown, employer representative.
Craig Pattinson, employee representative.
And we have apologies from Ishmael Awarish. And can the officers introduce themselves, please?
Timian Porful, Head of Pensions and Treasury.
Jamie Abbott, Pensions Manager.
Fiona Ray, Acting Committees Manager.
You have to put your microphone on.
Alex Goddard, Investment Advisor from Mercer.
I'm Julie Bailey, an actuarial consultant from Hamish Robertson.
And Douglas Green, another actuary from Hamish Robertson.
And we have Patrick Uzici from Legal joining virtually, and somebody else from joining virtually. You can introduce yourselves.
Yes, good evening. I'm Toyin Bamidele, Assistant Director of Finance.
We've had apologies from Ishmael Awarish and John Raisin, our independent advisor. Go on to item 3, urgent business. There are no items of urgent business, but there's a late report in relation to item 11, consultation on governance and reporting of climate change risks. Under section 100B 4B of the Local Government Act 1972, I'm of the opinion that the report should be considered at the meeting as a matter of urgency by reason of special circumstances. These circumstances are that the Department for Levelling Up Housing and Communities published its highly anticipated consultation on governance and reporting of climate change risks on the 1st of September 2022. As the consultation was published on 1st of September, the report was not available at the time of agenda publication. It is requested that the report be considered by the Pensions Committee and Board at its meeting on the 12th of September 2022 to ensure that it is able to comment on the proposed policy changes included in the consultation. The consultation ends on the 24th of November 2022 and officers, in consultation with the Chair, intend to respond to the consultation on behalf of Haringey Council in its role as administering authority for the Haringey Local Government Pension Scheme. And this item will be taken as item 16 in the agenda. So we move on to item 4, declarations of interest. Do members have any declarations of interest or conflicts of interest to declare? No? We'll go on to item 5, deputations, petitions, presentations and questions. None received so far. Item 6, record of training undertaken since last meeting. To note any training undertaken since the last meeting. Can officers or members update the committee on any training that they've undertaken? We've had actuarial training undertaken by members just now on 12th of September, which will be recorded in the minutes. Do we have any other training to report?
I will send mine in to Fiona.
Okay. Okay, we go on to item 7, minutes. That's in the supplementary agenda. Do any members have any comments on the minutes of the meeting on 12th of July, and whether we can agree the minutes? Councillor Bevan, then Councillor White.
I've got some questions on the minutes about the members of staff last year that left and recruiting of new people. Can you tell me how that's going? Can you also give me an update on the apprentice that we have, if they're still here? And it was agreed some time ago that we would have 2 apprentices. So I'm assuming that's being processed and not being on the back burner. And then on 6.5, it talks about a summary of the pensions benefit built up. And it says a copy of the statement has been sent to members. My understanding some time ago was we ceased sending physical statements and it was all going to be online. So I'm really surprised. Does that mean sent by email or sent by post?
Yes, so thank you, Councillor Bevan, for your question. So the item, I believe, is item 9, which will be given an update to the committee. Will cover all those questions that you just asked us. So we'll be able to discuss them in full during the item.
Councillor White.
Thank you, Chair. Yeah, 2 points on the minutes. So first of all, on page 3 of the supplementary pack, it refers to the question that I put at the last meeting about the annual report and the annual accounts, which Tim helpfully explained that primarily as a result of the COVID pandemic, timelines for these being extended, but that we would expect to be seeing a draft at this meeting. So I'm just wondering what the update is on that, and given that the deadline to have the draft accounts published was the 31st of July, whether we're still good. So that was point 1. And then the second one, on page 4 of the supplementary agenda pack, we had a little discussion on the concerns raised by the Palestine Solidarity Campaign about investments, and a helpful briefing was circulated to all members of the council. But I was slightly concerned by the wording in that said it basically, due to our passive investment strategy, it is not possible to pursue exclusionary policies. However, I don't think that is quite correct, because I know from experience with fossil fuels that it's possible to have discussions with other pension funds about maybe getting the London CIV, for instance, or maybe outside the CIV, to work together to express a kind of common desire by a number of funds to invest in a passive fund that does have certain exclusions, whether that's on environmental grounds or ethical grounds. So it would actually be possible, I think, if a number of funds were interested in investing in a fund that did have an exclusion, exclusions based on companies that were involved in breaches of international law, whether that be in Palestine or anywhere else, that would be a possibility. So I was just slightly concerned about the wording with that, and I wondered if there was a response to that. Thanks.
Thank you, Councillor White. So on your first question regarding the audit progress, yes, that was our intention, to be able to bring that report to this meeting. Unfortunately, we will be given an update as to where we are with that. We are more or less there, but we haven't published as yet. So the council is actually notified on our website as to the reasons for that, which is allowed by the statute for us to do so. But yeah, we are working as quickly as we can to produce that. I think when we get to the item on the quarterly update, I can give a bit more around what the implication that is on the annual report process, which has a particular impact on the fund. But we also have the auditors joining us this meeting, who will be also able to shed a bit more light on that particular issue. With regards to the Palestinian issue, I think, yeah, you're right to point out that there are a number of investments which might have those exclusionary features. I think the history at Haringey, you probably know it better than I do, is we've always looked to engage to see if we can find the right opportunities. So particularly on the item which we'll be discussing, which is this consultation, I think that's one of the items we can discuss around the identification of different opportunities and risks. But particularly why in that response we included that it was difficult to do so is more to do with the materiality in terms of monetary value. So you will notice that we had a very small exposure to these companies, and these are just exposed based of us being in the underlying index. As such, at present, there isn't an index that excludes those companies. From when I've spoken to colleagues, there doesn't seem to be there is any sort of appetite or discussion to exclude those. So I think we obviously will keep it under sort of a regular review. But the reason for that was we were unable to avoid these particular investments because we are already invested in those instruments that happen to just have the exposure to those particular companies. But again, I'll just reiterate the companies, the exposure is not large. Hence why there hasn't seemed to be much of different solutions where the fund could have that kind of strike in place. I don't know if maybe Alex wants to say a few words on that or not.
No, I think you've made the key point, Tim, which is that at the moment you are invested passively. That means you track an index in relation to broad ESG integration or in relation to specific subsectors of ESG like climate change. There are quite a lot of indices that have been designed specifically with that in mind. At the moment, our understanding is we don't have an index that's designed by someone like MSCI that would meet this particular criteria. And so you would have to obviously kind of lobby them to essentially set one up. The alternative would be you could have a segregated portfolio with Legal and General, your investment manager, but that would be a significant departure from the implementation approach at the moment. And so there are lots of different things that you would need to consider as part of that, sort of transaction costs and things like that. And as Tim knows, it is a relatively small exposure at the moment within the passive funds that we have in the portfolio.
Okay. All right, can we agree the minutes then? Thank you. Item 8, audit progress update. This is to receive a verbal update from the auditors. Can I now invite officers to introduce the report?
Thank you, Councillor Say. So yeah, the next item is the verbal update on the audit progress to date. So we are joined by the pension funds and the council's external auditor from BDO, David Eagles, who's just sort of popped up on camera. So I'll just say a few words and then David will probably give us a bit more of a fuller update. So from previous meetings, and as Councillor White has sort of mentioned, there was a question around the external audit and normally the timelines that the committee is used to receiving certain reports. So this year there has been quite a number of issues that have caused there to be a delay. Unfortunately, that delay in getting through the audit process has also had follow-over consequences, which has meant that there's been a delay in us publishing our report by the statutory deadline. But like I mentioned to members, we have put a notice publicly and we are working as quickly as possible to do a revised or to publish a draft report, which will be based on the previous draft. So I think some of the questions from previously was sort of the progress, because I know we did meet David, I think it was probably March was the last time he gave us an update. So he's here to obviously provide a more full update to the Pensions Committee and board as to where we are in terms of that external valuation and what might be the next steps for us going forward. So Chair, if that's okay, I'll be happy for David to give us the verbal update.
Yes, please, carry on.
Thank you. Could I also just take the opportunity to introduce our new senior audit manager for the audit, which is Tharshia Vosper, who has joined us virtually. She's just here to observe this evening, but I just thought it would be a good opportunity for the board and committee to meet Tharshia. If her camera will work.
It's Fiona, the clerk to the meeting. There'll just be a brief pause while I adjust her permissions. Thank you. That should work now.
Let's see. Marcia, can you join us, or shall we pause?
You will have to adjust your own microphone and camera settings.
What we could do whilst Tharshi sort of she said it's still restricted, but tell you what we'll do, we'll pass over that for the moment, and if I just sort of provide you with an update on where we are with the audit and some of the reasons for this continuing. So we are required to audit both the pension fund and the main statement of accounts at the same time. They are both connected, they are both part of the same statement of accounts, so one cannot be signed off before the other. In terms of the main audit, there are a number of things which are still outstanding to be completed, and also a national issue, which I think I may have reported previously, related to the accounting and audit of infrastructure assets. And that issue is at a national level. It has meant that pretty much barring one county council set of accounts, no audits have been completed of any outstanding infrastructure holding authorities since February this year. So we are, it's been a significant issue and a significant delay, and is requiring a change to the accounting code of practice applicable to local authorities, and potentially also to the issue of a statutory instrument from DLUC to address this particular point. So it's not a trivial issue, but Haringey, like other infrastructure holding assets authorities, is subject to this delay. However, there are also elements of mainstream audit work which need to be completed, both for the main accounts and also for the pension fund. In common with the position for the vast majority of other local authority auditors, we had to pause our work on the authority's accounts to address NHS audit period, which is between sort of April and end of June. This year has been particularly challenging, so actually has extended beyond that point into July, and in some cases even further. So our original plan, which was to come back to revisit the accounts in July, has had to be revisited. And what that means, because we plan and use our scarce audit resource, we plan a significant distance ahead. So individuals are booked to particular audits for over a whole year ahead. So when we need to bring them back to ensure continuity for the audit delivery for your audit and for other audits, then we have to basically take them back from other work which they've been planned, and that is a really quite complicated exercise. So that is what we are doing at the moment. Tharshia has taken over from a lady called Lucy Trevitt, who was the previous senior manager, who has moved into a different department within the firm. So Tharshia is getting to grips with Haringey alongside me, and has had a handover with Lucy. And what we're doing is putting in place the right resource with continuity to complete this audit as quickly as we can do. And that is expected to be over the next 2 to 3 months, depending upon some of the issues that we're having to deal with on the main audit, and also this infrastructure issue, which is still not quite completed. So I think the key point is we were unable to complete all of the audit before our NHS period back in April. There were some delays in terms of getting information through, and we weren't able to complete that audit work for the pension fund, at least before that point. So what we're doing now is coming back and completing these audits as quickly as we can do, and with Haringey as a clear priority to get the audit completed. So we have a meeting scheduled with senior officers of the authority on Wednesday to run through our proposals and the outline plan to get those agreed, so that we're all completely clearly sighted on what we need to do, and making certain that in terms of support of the audit, that the right people are available at the right time to make that work. And if there are changes we need to make, then we can make those iterations. But following that meeting, we should have a clear plan of attack, which we can bring back to this committee to keep you appraised of where we are going to. But as I said initially, the key factor is that we won't be able to sign off the opinion on the pension fund financial statements and therefore on the annual report until we have completed the audit of the main council's financial statements as well. So that's, I suppose, those are the key messages I needed to pass across this evening. I'm more than happy to take any questions about the position we have here or the wider market position and how that's affecting other auditors as well, if members so wish.
Do we have any questions? Councillor Bevan.
I don't know if I heard this right. Did you say the delay is caused by NHS? That means National Health Service to me. I mean, have I got that wrong, or have I got it right, or what?
No, that's absolutely correct. So pretty much all of the auditors who are involved in local government work are also auditors of NHS work. It's the same code of audit practice and the same teams that do the work. And so to make this work, make the system actually work, we provide audit services to both NHS and to local government. And so for the vast majority of the year, we focus on local government, but there's a certain part of the year which we focus on NHS, and that is typically between April and, as I said, the end of June was the original deadline. So yes, we all pause to complete the NHS work and then come back to local government.
Councillor Ingham.
Just a follow-on question from that. Do we have a timeline as to when these audits, because I didn't hear a timeline as to when you expect to complete this audit?
No, what I said was we have a meeting with senior officers on Wednesday to talk about the plans for the timing of the work. I did say originally that we're expecting that to be over the next sort of 2 to 3 months or so. So sort of September, October, November is the current plan. But we have to go through a specific mapping of who's doing what and making certain we have the right people available. So there's no definitive timeline at the moment. That is what we're talking about with officers on Wednesday. And as I said, we will bring something back to this committee so you have clear sight of what the intention is and the timelines.
Okay, thank you very much. Shall we continue on to the next item then, which is item 9, pension administration. Sorry, Councillor White, go ahead.
Thank you, Chair. Sorry to be a bit late coming in, but I just wanted to be clear whether there are any negative consequences for the fund or the council at all of us missing the deadline for submitting our annual accounts, which was the 31st of July. I don't know who's the best place to answer that question.
I could say in terms of the submission of audited financial statements, I think originally the deadline was set at the end of September, but against the advice of the audit firms and also the key regulators, the NAO and other accounting regulators. So the key measurement position was the end of November for last year. But what you may or may not be aware of, that there is a significant crisis within public sector auditing at the moment. There are some particular issues where, I suppose like a lot of areas, there are shortages of specialist individuals to undertake the work. So whilst we have the right level of resource to deliver things on an ongoing basis, as audits become due, because there are significant delays already in the system, and we are still auditing, in some cases, 1920 financial statements. There are some 1819 audits still outstanding and some from earlier years. And that is not just BDO, that is completely across the board with all the suppliers of local government. So there's a very significant delay, and it is unfortunately, although very uncomfortable, the new norm, which we're all trying desperately to get out of. In terms of actual consequences to you, well, the position on late audits is monitored very closely. There is no specific penalty that we are aware of in terms of the local government audit. Of course, you are unable to publish an audited annual report for the pension fund. until such time as we are able to complete our financial statements audit. But again, I'm not clear that there's an actual sort of direct penalty. It is frustrating. It is embarrassing for everyone to be in a position where we aren't able to keep up with things. But unfortunately, the reality is that we are all working behind on this situation.
Yeah, and I think just to echo David's point, there is no direct penalty to the fund. It does, like he mentioned, have all of our consequences. For example, in what form do we publish our annual report? Because we are required to publish that by the 1st of December. So I think we can have a bit more of a discussion around that. We can publish the annual report in draft form without the auditor's opinion because it does contain other information, but members will need to be aware that that report is not an audited report until this sort of process has been completed.
And that discussion, are we going to have that discussion here, the next meeting or later in this meeting?
We can have a discussion here when I provide the update in the quarterly update, because I think that I've sort of mentioned the council's position in terms of us getting our draft for 21-22, which I think was probably the question you were pointing to as to whether there's a consequence. No, there isn't, but we have every intention to have that report out this month.
Okay, thank you.
Okay, thank you. Shall we go on to item 9, pension administration report? And can I now invite officers to introduce the report? And I understand this is Mr. Abbott Jamie's first meeting.
Good evening. We have 4 items to update the pension committee and board on. The membership update of the scheme and the fund, the resourcing of the pension administration team, the update on the annual benefit statement, and the update on McLeod Remedy activities. So item 6.1 shows the membership position as at the 30th of June, broken down by active members, pensioner members, and the deferred members. And we'll look to update that at each meeting. So moving on to the resourcing of the pension administration team. So we had quite a few retirements of experienced members of staff leaving last year, and the council had appointed replacements, some vacancy already, me being one of them. But we're still looking to recruit 2 new officers, a payroll officer and a senior pensions officer. So in regard to those, item 6.3, we have shortlisted, and the interviews for those positions are week commencing the 19th of September. And to follow on the point about the apprenticeships, once we have a fully staffed pension administration team, we can then look to recruit apprenticeships into the pension team. Moving on to the update on annual benefit statements, item 6.4. So the local government pension schemes regulation 2013 require the administration authority to issue annual benefit statements to active and deferred members by the 31st of August. And I'll move on to 6.5. Basically, the ABS provides scheme members with a summary of their pension benefits built up over the course of the membership up to the 31st of March 2022. The statements were made available online to the via the member self-service portal by the 31st of August for all active members, and copies of statements were posted out to members who are deferred members. So we kind of did both. So active members got online statements, deferred members got statements in the post. Any active member who wanted a postal statement, we sent some out to them. So moving on to the McLeod activities. So a bit of background. The pension committee and board have previously received advice regarding the outcome of the McLeod case, which is an age discrimination court case involving the transitional protection arrangements introduced as part of the 2014 reform by the LGPS. So on the 17th of March 22, the Public Service Pension and Statistical Officers Bill received royal assent, which turned the act into a law. In mid-July 2022, the Department for Levelling Up and Housing Communities provided an update on its work to rectify the McLeod age discriminant case across all effective public service pension schemes, including the LGPS. So basically, the next steps, 6.9, So the DLUCHC have indicated their intention to publish an updated draft regulations for McLeod Remedy. And looking to come into force in October 2023, following a period of consultation. A meeting with software providers is to discuss the implementation of the McLeod Remedy and the timetable planned for this later this year. So once that's been done, item 6.10, a paper will be brought to the pension committee and board to consider the implications of the proposal and the remedy regulation once these have been issued. So what we're doing at the moment, so 6.11, we're doing preliminary work is currently underway to assess the impact of the amendments to the pension fund. And we have engaged Haywoods, the pension fund's administration software provider, to assist with the necessary data collection and validation in preparation for the activity necessary to implement the remedy for those members affected by the regulations. So 6.12, we do anticipate that the implementation of the proposed remedy regulation will be both complex and time consuming, particularly the collection of information and the subsequent McLeod calculation required to perform any retrospective corrections required to member benefits, and additional resources are likely to be required to undertake this work. And we will continue to keep the pension committee and board informed of any developments relate to the McLeod remedy activities.
Yes.
Go ahead.
I know the reg rating later on this was green, but I was just wondering on this specific point, the point raised earlier is, do you have enough time and resources to complete this work?
So at the moment, yeah, we have Haywoods on board to help with the initial data collection stage. So it's kind of a two-part project. We need to collect the service data and any service break data with all members, because after 2014, where that stopped becoming a requirement to calculate a pension benefit, because it was care, not relying on service, a lot of funds, including Harrogate, stopped collecting that data. So we had to go back to employers to kind of get that data again. So that's the initial first stage. And we have Haywoods assisting with that. Then the second stage will be the retrospective correctional accounting for the affected members, and that will be a bit more complex. I do feel, like I mentioned in the thing, that we do maybe need to bring on more resource to help with the latter stages.
Yeah, so maybe just to add on to that as well. So I think the work that we're currently undertaking with Haywoods would give us the scale of what the remedial, what the impact would be, and whether we need any additional resources. So as being pointed out in the paper, once we have a better idea of that, we'll come to the committee with some proposals. But given the conversation we've sort of been having at the moment, it does seem like they require a lot of manual sort of work in order to actually amend those data or collect that data in place. But at the moment, we don't actually know what the scale of that is. So we're just sort of bringing this to our attention that we are doing the work to try and find out what the scale of that issue is, as this is likely to be a requirement starting from October 2023.
Councillor Bevan.
We used to have an indication of the monthly visits to the websites in this report. Each month, a number of people have access to Haringey pension website. It seems to have been removed, so whether we could start that up again.
Yes, so we can certainly look into that. Myself and Jeremy are working on improving this report so we can produce some of that information. Previously, the previous pensions manager used to compile that, but unfortunately, we're not aware of how she used to get that information. So we will be looking to restarting that again and including it in this update going forward.
And then, have we got an apprentice now? Have we not?
No, so we don't have an apprentice in the team at the moment. I think you did point out that we should have two, but we only have a post for one. The plan was, because of the scale of the retirements that we had in the team last year, we were unable to bring on an apprentice because you require a lot of experienced staff to be able to train them. So our prioritization, the first stage of recruitment was to get Jamie, who's the pensions manager, as a replacement. We're now in the second phase where we are recruiting team leaders, pensions officers. We envision if this round, and so far it's been quite successful actually, we've had quite a few people apply. If it is successful, then we'll do that final stage where later on this year we can actually get an apprentice. As I've always said at this meeting, we do welcome any members who've got interest in terms of apprentices that they know who might be keen to be trained up. I certainly feel that there's a lot more people who could benefit from working in pensions, and we have a sort of we are working on a planning process of what that training program would look like, what exams or qualifications, etc. But at the moment, without an experienced staff already on board, there wouldn't be much to sort of support that apprentice earlier on in their career.
I'm surprised because I'm sure I remember being told we had one apprentice before I left this committee, and now I've come back. So in that previous time, I'm sure the committee was told there was one apprentice, but I don't think I've misremembered that, but nevertheless, but the aim was to have two. The aim the committee agreed was that they would have two apprentices. So I'm assuming the chair is still supportive of that. And I understand you've got other issues to make all that work, but we need to press on with it because this was talked about, as I say, when I was on the committee previously, and nothing seems to have happened.
Yes, I mean, I'll have to apologize because I think that probably predates my time here as well. But that is something that has been passed on, certainly from previous managers who've handed over to me. So we are aware of that. What I can say is the delay, because the apprentice wasn't already there when I joined the team, was due to the retirements we had in the team. We couldn't actually have an apprentice if no one is around to train them. But we do take that on board. And if there is a need for us, obviously we'll start with one apprentice. And if the chair and the committee feel that we could take on an additional committee, we are happy to put a plan in place to make that happen.
Okay, I've got a question actually. It's on page 5, the Haywards report on this issue. It says key risks and issues. A risk that employers do not respond or supply data in the incorrect format. Pension fund will be supplied with a list of the employers who've not replied. I mean, what's the effect of people not collaborating in this process?
Yeah, so the project with Haywards, the agreement was that they would get the data request format out to the employers and then do 2 chases. If there are no non-responders, then the onus to chase the employers come to the fund, and we have chased employers as well. So we are still waiting on guidance, which I mentioned is coming out shortly, on what to do about non-responders. If there's assumptions to be made, but at the moment we just don't really know. All we can do is keep kind of chasing employers for the information we need in the right format.
So can we note the report and the information provided? Yes, thank you. We move on to item 10, which is the quarterly investment and performance update. And can I invite officers to introduce the report? Tim.
Thank you, Chair. I'm happy to introduce this report. As we go through the reports, I'm sure Mesa might want to come in as well and provide some comments in terms of the market environment, but I'll just have a quick run through what is presented in this particular report. So the first thing to sort of bring to members' attention is mainly on the performance since the quarter. So that is between March and the 30th of June 2022. The market value of the pension fund was 1.687 billion, and that was a decrease of about 6% over the quarter. Primarily, this was driven mainly by there's a lot of uncertainty in the economic outlook at the moment, and also the central banks during this period tried to aggressively increase their bank rates to try and curb sort of inflation. So the major impact in terms of performance were mainly in the listed equities and also in the fixed income asset classes. But we do have some allocation to investments, to alternative investments that seem to have sort of helped us out during this time period. So I think this is obviously an area where there is going to be a bit of volatility over the next few months or so. But that's something I think as a committee, this might be something we want to pay consideration to. In terms of section 6.4, that just provides the investment performance. There's a summary for the quarter, for the year, and also for 3 years and 5 years. So members will note that over the quarter, the performance was worse than our benchmark. And over 5 years as well, it was worse, but it's improved over the 3-year period. So this obviously depends on sort of a timing point. There isn't a big difference between what our benchmark is and what our actual performance is, but it's something for members to note in terms of the trend going forward. So maybe I'll just take a pause on that because that's just specific to investments. And if there are any questions or if advisors want to comment on.
Councillor Incoe.
Thank you. So mine's a specific question. I don't know if it's appropriate, but under private equity, it says Pantheon. I'm not familiar with Pantheon. Can somebody just give us a little bit about what Pantheon is?
So Pantheon have been a manager for Haringey for certainly as long as I've been involved, so since 2014, and I think probably quite a lot longer than that. They are a US-based manager, and they manage the private equity mandate using a fund-of-fund approach. And so essentially, they will draw down capital from us, and then they will allocate it to a range of different investment managers with a view to providing diversified exposure to the asset class. But as you can see from the returns, they are a manager that have done well for us over a long period of time.
Thank you.
Yes, go ahead.
My question relates to the performance of the multi-sector credit and the absolute return funds. I'm taking it we have those there because they don't correlate to some of the other asset classes. But then looking at the performance quarter on quarter, it seems they've gone down just like equities. So I'm just curious as to their position and what we think about that.
Thank you. It's a good question. So I think I will treat them separately, if that's okay. So what's called multi-asset absolute return in the report, the Ruffer portfolio, that is designed with a view to generating positive absolute returns, essentially regardless of what happens in financial markets. And so they would not stand behind a defence of, well, the equity market is down and therefore we've lost money. Obviously, it's disappointing that over the second quarter they were down, but if you look at the year-to-date figure, they were actually marginally positive. And this is over a 6-month period whereby certainly developed market equities, overseas equities were down by nearly 20%. And so Ruffer have been able to provide meaningful downside protection by their focus on balancing risky assets with what they call sort of fear assets or protective assets in the portfolio. This is consistent, again, with how they've performed in previous periods of financial market turmoil. So those of you that were involved in the committee at the onset of the COVID pandemic might remember that Ruffer performed very strongly in Q1 2020. And again, going back further, they had a particularly strong 2008 during the global financial crisis, for example. So they, I think, have done the job, although over the second quarter they were modestly down. In terms of the multi-sector credit, so this portfolio allocates to a wide range of growth fixed income asset classes. So things like high yield bonds, leveraged loans, for example. Now, although a majority of the returns over time do come from income, and so you would expect to have a more stable return stream compared to equities, these are still market sensitive assets. So typically what happens when equity markets go down significantly, the spread, i.e. the extra return that investors like yourselves demand for owning risky bonds compared to government bonds, goes up, and therefore you realise negative returns on those assets. So I would expect the multi-sector credit portfolio to be highly correlated to equities, although not to fall as much as equity markets have done. So for example, over the year-to-date period, CQS are down by about 9.5%. As I mentioned, overseas equity markets down by about 20, so capturing about half of that downside. And so again, it's reducing the volatility without necessarily being absolute return focused, unlike Ruffer, which does have that uncorrelated nature.
Yes, Councillor Highness.
I wonder if you could say something about the 6% decline in the fund's value. Is that approximately standard across local government pension funds, or is that exceptionally good or bad compared to others?
So I haven't seen the benchmarking analysis that typically gets done in terms of this, but I could say anecdotally that I would expect that to be quite significantly better than the median performance from the LGPS. As I mentioned, overseas equity markets down about 20%. Those make up a large proportion of many LGPS funds, as you're aware. So the fact that we have had quite high exposures to what we would call diversifying asset classes will mean that we've been well positioned. And similarly, or linked to that, the exposure to assets with explicit linkage to inflation. So the property portfolio, for example, has been beneficial for us. I think, although it's never nice to sit on a sort of 7% negative return, I do think we can be comforted that overall the investment strategy is pretty much performing as we might expect it to be during this challenging market environment.
I haven't seen any other pension fund data, but I do see investment returns from other sectors, particularly from foundations. And those numbers are pretty good against the sector. So 6% over this period has been pretty good against most people are much worse.
Councillor Inga Karen.
Thanks. Can I ask a follow-up question then? Do you think the weighting of our current asset classes is in the portfolio is correct for the current climate or going forward?
I guess what I would say is that we are due to review the investment strategy in the context of the actuarial valuation that is ongoing. I think I mentioned at the last meeting that I continue to believe that's the right time to look at this in detail. I don't think you need to accelerate looking at making any changes because you are relatively defensively positioned compared to many schemes, and you do have some components of the portfolio that may well benefit, for example, from a continued rising interest rate environment or a continued rising inflation environment. So I think a lot of the work that's gone into designing the investment strategy over the past kind of 10 years or so puts you in a relatively good place, and you can afford to wait a few months and to undertake that review once we've got some sight in terms of what the funding level is as it stands today.
So yeah, just to add to that, at the next meeting, the actuaries will be providing that draft whole fund analysis, and at that point, we can start having those discussions around what that valuation or that investment strategy, what that needs to look like, and yeah, we can have messes or provide a few more other options based on what the portfolio is currently positioned. So I can continue, Chair, if there's no more questions. So the next bit is just to update on the funding position, which is not really much of an update, but just to point that we are going through the valuation cycle, and we have the actuaries with us today. There will be an item that they'll be talking through in greater detail, which will provide some insights into what the valuation is going to look like. What we normally tend to do is we do provide an update to members of the funding position, but given that we are going through a valuation cycle at the moment, it's worth completing that first. Then from next year, we can start with the new assumptions, which would have been agreed by the Pensions Committee and Board. The next bit to update is really on the London CIV, which is our proportion of assets that are invested in the London CIV. The London CIV is the investment pool for London, and we are a member alongside 32 other boroughs. And at the moment, our valuation, or as at the 30th of June 2022, was 72%. So on to the statement of accounts update, which I have referenced to earlier on in the meeting. Essentially, this is just to update members that there was a delay in us uploading the draft statements of accounts by the deadline of the 1st July. So at the of the 31st of July or the 1st of August. So I think there are sort of two deadlines that are linked. The first one is, at what point do you need to put your reports or publish them online in draft form? Then the auditors are supposed to come in and complete their process. And that deadline is historically been the 30th of September. But like to the points I mentioned earlier, there's a lot of slippage now due to all different issues. So for us as a fund, given the delay in that audit process being completed, it's also led to a delay in us completing or having that draft ready. Essentially, the discussions we're supposed to have is whether we can have a draft when you haven't had finalized accounts. Across London, we're not alone. There are, I think, about 10 or so boroughs that have also not published their accounts, and it's mainly related to the same issues. So I think the approach that we've taken is we will go with the last draft version that we had, and we'll update that with the new information. And as the audits get completed, we'll be revising that information and publishing it online. This has a key implication on the annual report, which we are required by law to produce every year. Our intention is to bring that annual report to the next meeting because the committee and board needs to approve that report before it is actually published. So there will be a short period of time between us presenting it to the committee and actually publishing it. But our plan is we'll be able to bring that draft report and the annual report to that meeting, and hopefully that can get approved, and then we can have that published by the 1st of December. Just to add that we are, from the work that I've been seeing with the team, I would say we are more or less there. The papers are just in their final review stage, so we should expect to have those published in draft form at some point this month. So yeah, I think that was the sort of the full extent of my update, but I'm happy to take any questions that have not been covered already.
Any questions? No? Okay. Yeah, go ahead, Councillor.
Just on the timescale of bringing the report to this committee at our next meeting, which is the 22nd of November, and then publishing it by, what was the date? Sorry, the 1st?
It was the 1st of December have to be published.
So that's 9 days. So I guess we just have to hope that this committee doesn't have too many changes it wants to make to the report then.
Yes, I would hope the committee will be kind to me and not ask for material changes, yes.
Could I suggest that maybe it might be possible to, ahead of us formally discussing it and agreeing it might be possible to circulate it to us before the meeting? Is that possible, or have some way?
I'm looking to Fiona whether
some way that we can think and make comments informally if there are comments that need to be made.
Yes.
Before we have to formally.
Yeah.
Exactly. Yes.
Well, yeah. Thank you very much for your comment. I think from our perspective, operationally, there is no problem. I was just looking to Fiona whether we can do that.
Of course, yeah, we can always publish an agenda early. That's an option, or we can circulate it informally if that suits better, if it's ready before the agenda publication date.
I suppose what I'm asking for is a kind of like engagement with the committee about the contents of the report, just in case there are any. We don't want to be throwing you a curveball at the very last minute. So it's just that.
Yes, no, we can certainly visit this outside the meeting and provide a further update, but I would welcome that informal discussion prior to the meeting.
Okay, this item also has some exempt information, and the recommendation will be considered in the exempt section of the meeting, although this item is just a note. There's no formal decision. And we go on to our agenda item 11, which is actually the government consultation on governance and reporting of climate change risks, which I said was item 16, but it's actually item 11.
Thank you, Chair. Happy to introduce this item as well. So this is one of the items in the supplementary agenda, which I think some of you might have in paper form. And as Councillor said at the beginning of the meeting, the reason for us bringing this to your attention is this is a highly anticipated consultation. Certainly, we have discussed this at this committee meeting previously, which will have implications on your responsibilities as the Pensions Committee and Board. So the reason why this sort of is a late paper is the consultation was actually published on the 1st of September. At that point, we'd already published our draft agenda for this meeting. But essentially what that allowed us to do is we still had enough time to be able to look at what the contents of the consultation are. And we felt that it's worth bringing it to your attention at the earliest time so you can provide comment on it. Second to that, the consultation actually ends on the 24th of November, 2022. And I think when we're talking about tight deadlines, this one's even tighter. The next meeting will be on the 22nd of November. So we were sort of having that discussion and having comments from members as to what they feel we should include in this response to the consultation. We are intending to respond to the consultation. And there's about 12 questions, I think, that are covered within the document that we might be helpful to get a steer from the committee if there are any sort of strong views on this thing. So just to maybe try and summarize it at a very high level, the first thing I'll point out is this consultation is essentially going to decide how we go about managing our investment risk. It looks at the governance arrangements around that managing of the climate change risks, but also at reporting it. So in the paper, we've sort of outlined a summary, and the main thing is the committee and board will need to start considering the framework that it currently has in place and how it will need to be compliant in terms of its responsibilities when it comes to considering climate change risks. There's a summary attached in Appendix 1, which I will go through in some of the key areas, but just on the considerations on 6.7 onwards is mainly on the fact that there will be a requirement for us to publish this report by the 1st of December alongside the annual report. So the report itself can be a standalone report, or it can be part of an appendix to the annual report, but the requirement will be this will need to be published and the committee and board will need to have approved that. So if I just go to Appendix 1, which hopefully those who have it can sort of follow with me. This sort of summarizes the key proposals, and these are just taken from the government website, from the Department for Levelling Up, what they're proposing in the consultation. The first thing is really the scope and the timing as to when these regulations are likely to come into place. This will be as of December 2024. So the first report you need to produce will be at the 1st of December 2024, and it will be based on the previous year's accounts. So that will be the 31st of March 2023. The key ask for administering authorities, and the Pensions Committee and Board sort of has that delegated authority to implement the functions of Haringey Council in its role as administering authority, will be mainly to establish an ongoing basis and oversight of climate risks and opportunities. There is a requirement that the committee and board must satisfy itself that officers and advisors are assessing climate-related risks and opportunities and presenting them to you. So a framework would need to be developed. I think we do have that framework in place at the moment, but you'll be able to sort of comment and make sure that when we're making investment decisions, you're taking all of these on board. The committee and board will also need to have an insight into the strategy, into what are the implications of climate change risk on the strategy. And the interesting thing that they mentioned in the consultation is this is not just going to be on the investment side, which I think there's been a lot of focus recently, but it's also going to be on the funding side. So we do have the actuaries today. Maybe they have some things they can say here to that effect, but you're going to be having to consider both strategies in terms of climate change risks. The interesting things that they sort of mentioned, which I suppose are much more tangible, which will form what they're calling this climate risk reports, which will be required to produce every year. There will be 4 metrics that we're required as a administering authority to publish on. The first one will be on absolute emissions, which is basically the total carbon footprint, not the carbon footprint, but the total emissions that are exposed within the investment portfolio. So these will be measured on scope 1, which is sort of your direct emissions that you're directly responsible for. So if you think of your oil companies, they are mainly participating in that scope 1. And then there's scope 2, which is more on the supply chain, so sort of moving goods and services, or maybe someone like an Amazon, for example, you'd consider them to be heavily involved in scope 2. And then scope 3 will be really the last part, which is kind of based a lot more on estimates, because there are some sort of double counting issues there, but it's essentially what we're all using. So us using our phones and charging them, that would be charged to Apple. So if you're looking at sort of a technology company historically, they don't seem to have a big emissions. But when you look at the scope 3, they can actually be quite a sizable part of the portfolio. The next requirement will be on having a carbon emissions intensity metric. What that essentially means is you look at your absolute emissions and you divide them by the size of your investments. So it sort of is a way of measuring how much each investment is contributing to carbon footprint, for example. They have sort of reference which ones they prefer. So either carbon to revenue, I suppose it will be approved, or the carbon to investment value will also be approved. But the weighted average carbon intensity at the moment, they are saying is not favored. And if we were to go down that path, we'd have to explain why that is. The third metric, which I think is actually quite interesting, will be on data quality. So not only are you supposed to be reporting on these different metrics, you're also supposed to be disclosing the quality of that data. And essentially that means the coverage. So in your investment portfolio, how much of your portfolio is based on pure estimates, or how much is verified by I think there's an audit standard that has been mentioned in the consultation. But essentially, as a committee, would have to say on our portfolio, this much has been covered by verified or reported, or the rest is unavailable. So we've had to estimate it. So I think I'll get sort of to the end as to how we can sort of be assisted in this process, because I'm mindful that I'm sort of saying a lot of things that sound very complicated, and complicated me going through them myself. So the final bit will be on the metric 4, which is on Paris alignment. And essentially that will be looking at which part of our portfolio is linked to a net zero commitment for 2050 or sooner. So members will be aware that the RAFI multi-factor climate transition fund actually is linked to Paris alignment. So that's something we could report on, but that will have to be measured each year and disclosed. Following on to the metrics, there will be a requirement for the Pensions Committee and Board or the administering authorities to choose a target, I guess, one of those different metrics. The target, the spirit of the target is it's not meant to be binding, but it's meant to sort of set a marker, which as a committee and board, you may wish to work towards. Essentially, every year you'd have to update the progress against that tracker, and you can revise it if you wish. So either bringing it forward or pushing it back based on the latest data, but that will be of the administering authorities choosing and does not need to be binding under the regulations. The final bit, I think I've talked about this in terms of the disclosure. The reason why they want this to be done at the 1st of December is the Scheme Advisory Board plans on actually doing an LGPS-wide or a local government-wide report. So having that data in the same timeline as the annual report will allow them to produce a scheme-wide report similar way as they do with the annual report. So the final bit, which is really, I think, quite important. I mean, I've sort of talked about this, but the key requirement will be on any of the decisions that the committee and board makes is that they seek proper advice. And in the consultation, it refers to knowledge and skills. So this is something that I think alongside Mercer, we can sort of provide members training on this, or if members want other specialists training on this type of stuff, that can be provided closer to the time. So essentially the reason why we have brought this to you, I think this is now going back into the main report to summarize the next steps, is we plan on responding to this consultation. I think this is a consultation that has been highly anticipated, is quite interesting, but will also change your responsibilities in a meaningful way. So before we reply to that consultation, it'll be good to get some initial feedback from members. The feedback can also be provided today, or if members want to digest the information a bit more and provide it later in writing, we would welcome that, because I'm mindful that this was a late report and you might not have had enough information or enough time to go through the report. So on that note, Chair, I'm happy to sort of defer back to you and open it up to questions if there are any.
Okay, Councillor White. Councillor Hyman.
Thanks, Chair. No, I just had a couple of initial kind of off the top of my head thoughts about this. First of all, it seems a little odd to me that they're picking out 4 metrics that we're expected to report on, but then they're only asking us to set a target in relation to one of these metrics, and we get to choose which of those metrics it is. I'm just wondering what the thinking is behind that. Why they're not asking us to set a target on all 4, or or if they want one, why they don't tell us which one. Obviously, people are going to pick the one that's the easiest to meet, to predict a target that you can meet, aren't they? So that was the first one, and then the second one was just on the governance bit, where it says we, as the administering authority, need to maintain a process or processes by which we can satisfy ourselves that officers and advisors are assessing and managing climate-related risks and opportunities. I'm just wondering what kind of form those mechanisms might take. Is it just a matter of like amending the standard format of reports that we receive at every meeting, or is there something a little bit more in depth?
Yeah, so I'm going to also let Alex come in a bit. So on your second question in terms of what that will require, so I think the first thing is this is probably going to have an impact on the investment strategy statement and what we outline. And to your second point around, it will change the format. So for example, in the quarterly update report, we don't sort of provide anything to do with, direct discussions around climate risk. There might be a requirement that we need to produce that on a quarterly basis for members to comment or question or propose alternative things on the agenda. So I think that will be probably the key area. Or it can be a separate sort of piece of paper that needs to be brought on a regular basis, but that will be up to the committee and board to decide what format that takes. In terms of the first question you asked on setting targets, So my understanding is from the Department for Levelling Up, they don't want to impose targets on funds, and they don't want this to be something that funds feel they have to do, or they're going to be sort of ranked based on their performance. So this target is actually meant to be more around our processes. What do we think we can realistically achieve in a reasonable time period? We set a target against that and we track that. The targets, I'm not too sure whether in the consultation says how widely they're going to be reported. What's going to be the key requirement reported is on the metrics. And essentially, this is a first step of actually measuring what the footprint is. So when funds are making these decisions, they're much more informed, and there's a framework around how those decisions are made. So they're not trying to sort of impose targets, but if funds do want to set more binding and more serious targets, they are more than free to do so. They are leaving that choice to the Pensions Committee and Board or to other administrative authorities across the country. It's not something that they want to be seen as imposing upon the LGPS, given all the other requirements around how we have to set our investment strategy and our investment portfolio, etc.
So just a couple of points to add. In terms of how you would satisfy the fact that your advisors are assessing and managing climate risk when advising you, this is something that we have put quite a lot of thought into from a sort of consultant perspective. There is an investment consultant sustainability working group that have come up with a framework essentially to help our clients judge us in that regard. And so I could share a full submission document essentially that provides evidence against each one of the criteria that they have come up with. The other element to be aware of is you've set Mercer objectives as your investment consultant. What we are seeing many schemes do is actually add explicitly into those objectives some around ESG and climate change. And then it becomes part of the annual scorecard framework whereby you can actually consider this and formally discuss whether we have been doing that job for you. So we will, I guess, provide you with the tools to make that assessment of whether we are incorporating that when providing the advice to you. In terms of the targets and the metrics, I think it's a fair question. I think they are obviously looking to try and find a balance between doing something meaningful and avoiding undue complexity. So they are asking for a range of different metrics, but they haven't asked for targets to be set on each of those, because arguably that would just introduce an additional layer of complexity and also monitoring into the process if you had to assess progress against 4 or 5 different targets. I do think the ultimate objective is to get more and more pension schemes to contribute to the net zero agenda. And so I think many schemes will end up setting a net zero carbon emissions target and sort of essentially kind of convening around that, as well as short-term targets as we begin to make progress towards net zero, as opposed to setting a target on some of the other metrics which are included.
I mean, am I right in saying that Haringey's pension fund is relatively green in its current form anyway? So it's unlikely that these targets would be especially onerous on us and our specific situation.
Yes, so I would say comparatively, and I think probably I can speak to this a bit more as well. Comparatively, yeah, our fund has decarbonized a lot more than other funds across not only London, but across the LGPS. So I think we are also going to be quite interested in seeing what those numbers look like once there's a framework of how you report against them. Because there are certain funds that I think when I was talking about those different scopes, need to be aware of what the fund is reporting on. So that might be of interest to the committee and board once that initial report has been produced. And to Alex's point about setting a target, once you know what your starting point is, it's much more easier to set that target. And I feel this is the work that the scheme advisor, the Department for Levelling Up is looking to get pension funds actively doing. In the private sector, they've already been doing TCFD reports. So once you're aware of what that starting point is exactly, then you can set targets against it. So without having sort of run that full analysis on our fund, I can't say that we're certainly the best, but I would say based on what other funds look like, we look like, yeah, we'd be looking reasonably well in terms of our carbon emissions comparatively.
Well, I would just note a couple of points. Firstly, it's interesting that this seems to move away somewhat from the fiduciary duty that I understand is central to the pensions fund investment. And I think, doesn't that open the door to some of the conversations that perhaps Councillor White raised earlier about disinvestment and other kinds of unethical issues? Because if this is saying that it's not only about trying to maximize return, it's also saying we have an objective to meet climate goals. Are there not other objectives that we could conceivably say that as a local authority we want to try and pursue, whether that be about human rights abuses or anything else?
Yes, so I think this is more around the assessment and the measurement of those risks. So it's not necessarily meant to be a tool that can be used to divest, but it's about looking into the future and what the implications of climate change on the investment portfolio. So if anything, it's an add-on to the fiduciary duty. So it's not necessarily looking at, I think even in the document, and I do encourage everyone, if you have the opportunity to read the document in full, they're not looking to encourage, they're looking to encourage more investment, for example, in energy as a result of this work. So we obviously have got allocation to renewable infrastructure, but across other local authorities or other local government pension scheme, that's not a widely sort of common allocation. So this is going to be in addition to the existing responsibilities rather than actually taking away the fiduciary duty. I think if anything, we have to evidence that even in a changing world, the portfolio is still going to be safeguarded for the members.
Yeah, no, I think if I could just add, I think it's a really good question, by the way. But the sort of definition of fiduciary duty has changed significantly in the past sort of 10, 15 years. There used to be a sort of widespread perception that if you were incorporating ESG considerations into investment strategy decisions, that might be a violation of fiduciary duty because you were considering things which were not directly linked to the returns. But as our understanding of ESG has developed and we've sort of understood actually how potentially financially material ESG considerations, including climate change, could be in terms of risk and indeed financial returns, it is now explicitly part of fiduciary duty to incorporate ESG into those investment decisions. So it's kind of turned 180 degrees. So you are very much, like, by understanding your exposure to these risks, you are very much being consistent with your fiduciary duty.
And just to add, it's not just about risk, it's also about the opportunities that the transition will lead to.
Councillor White.
Thanks, Chair. Yeah, just as this is a consultation and we're going to respond to it, I just wanted to say that in my view, especially given that we believe ourselves to be a relatively green fund in terms of our investment portfolio, it would be useful for us and our fund members and the residents of Haringey to have as much information as possible about this aspect of our investments and of other funds as well, so that a comparison can be made. So I would urge for, in terms of what needs to be reported, I would urge for the kind of maximum, so that there's more, the most information is out there, so that people can make a good comparison. We can, and others can as well.
Yes, we'll certainly take those points on board and feed them back in the consultation response.
And is it correct that if people want to comment, they can email you directly?
Yes, I would welcome as much input from the members of the Pensions Committee and Board. We don't know when exactly we are planning to sort of publish it, but I think the idea is we do bring a draft to the next Pensions Committee and Board for further comments, although there'll be only 2 days to turn that around. So hopefully it won't be much changes. There's been engagement throughout.
Okay. So we note the summary of the policy proposals included in the consultation appended as Appendix 1 to the report, and provide any initial comments and feedback to assist officers in drafting a response to the consultation. And we go on to agenda item 12, which is the Local Authority Pension Fund Forum voting update.
Thank you, Chair. So just loading up on my laptop. So yeah, this item is just a standing item that we bring to every Pensions Committee and Board meeting. Essentially, the Local Authority Pension Funds Forum is an engagement group that engages on the behalf of the pension fund. We are a member in this group, and what they do is they do they sort of work on shareholder engagement. So that includes issuing out voting recommendations, but also includes having direct interaction with the company boards and also management at different companies. So in this report, we just outline the update as of the 31st of June, as of the 30th of June 2020. Just to say that LAPF managed to engage with 90 companies that are domiciled in 20 different countries. That doesn't necessarily mean that they were going to all the countries. This can be done virtually, and they can sometimes be in the form of a letter. And in section C.3, there's a chart that's taken directly from LAPF, where they show the breakdown of their engagement, which were mostly in climate change. They then issued 10 voting alerts. So LAPF tend to issue voting alerts around the annual general meeting cycle. Essentially, they send this to all their members, so we can then pass those on to our investment managers so they can vote our particular investments in accordance with the recommendations. So as you see from the table in section 6.6, it just outlines the recommendation. It has a description for what the vote that LAPF was issuing was. It then has their recommendation, and it also has Legal & General's vote against that recommendation. So Legal & General, they are the main investment fund that sort of looks after the our listed equities investments. And they have a big organization that's also involved in setting out their own sort of voting and engagement policy. What they tend to do is, for different reasons, when they haven't voted in line with LAPF, they provide a commentary as to the reason for that. Usually, they feel that it will be a case of the company has made progress, even though LAPF feels they might do more. They feel like that progress warrants them voting for the passing of that report, as that will require them to provide further updates going forward. So you can see it was quite a busy quarter with those 10 voting, and I've sort of just provided some of that information and how that voting breakdown went. So that's all I sort of want to draw attention to in that report. I don't know if there were any specific questions from members.
Any questions? Thank you, Karen.
Just briefly go through that team, because I'm very confused. I mean, let's just take the first line, Barclays. The description, management resolution on climate strategy report. LAPFF recommendation against. LGIM vote against, and AGM vote outcome for. Just explain that to me, because it's quite confusing.
Right, okay. I'll make an attempt. So essentially, the management at Barclays put forward a report on climate strategy. The reports, I think according to LAP, I can't remember the exact details of the case, but there were sort of things that they put in the report that LAP felt were not going as far as they could go. And LGIM actually shared the same view. They felt that the climate report was not strong enough, and some of the calculations that they were saying they were include in the report were not compliant with best practice. However, when the resolution went for a vote, which is the vote of all the company shareholders, the vote still passed with 81%. So that more speaks to the shareholder base for Barclays. So in as much as LAP are working as much as they can to get this agenda on, and how this actually ended up being an item is LAP recommended that they go and draft a report, which was a successful vote. But when it came to the climate strategy report, some of the other investors who are global investors also felt that they were happy for that to be voted for. So yeah, it's similar for, I think, for BP, where LAP felt the same. I think it was similar, but LGIM actually felt that BP had made good progress amongst the oil companies to make this transition. And that's why that was sort of a full vote. So usually, if you see like where it says the management resolution, that's a resolution that's been brought forward by the company's management. A shareholder resolution is usually brought forward by a group of activist shareholders or a campaign group that usually are seeking to get the agenda onto the management's radar. So they might require that management produce a climate report, and then the second time is management saying, here's the climate report you asked for. Can you vote for it now?
So just to follow on from that, if you look at two further companies, Electric Power Development and Sumitomo, interestingly, are you saying that the shareholders voted against what the companies put forward, and actually both the recommendation from LAPFF and LGIM was in support of that?
So with that particular case, that was brought forward by the shareholders, not the management. The management, their recommendation was, we actually don't want this to be passed. So when they went to a vote, management actually were able to overwhelm the shareholders. So particularly with this case, you had LAP who were on the side of the shareholder resolution, LGIM who felt that this is a sensible thing for a company to produce, but the company themselves who felt strongly against it. And depending on their shareholder base, and in some of these cases, I think we discussed at the last meeting, it's not necessarily that the LAP shareholders are the biggest shareholders or LGIM are the biggest shareholders. These are global companies that their main shareholders, if it's maybe a family, might decide to vote their block against a resolution. So it's quite complicated, but getting that issue discussed actually does create some discussion around it and leads to more development. And we've seen in the case of BP, which I mentioned earlier, is that was initially led by shareholders, but now they're having to produce those reports on a more regular basis.
Councillor Hymas.
I know that we haven't been very successful, LAP. We seem to lose most of the votes that we go for. Does that not somewhat undermine the argument that it's good for us to be on the board of these companies because we can make a difference or because our voice is being heard, when actually in the majority of cases it seems like the position that we put forward is totally ignored?
So I don't know, maybe members who've been on the committee for a while might be able to assist on this one as well. But I think LAP as a group has actually done a lot in terms of progressing the agenda. So obviously this is a particular snapshot of a particular sort of voting cycle. But if you look at some of their engagements around globally and how companies have actually passed some of these resolutions, they've been quite effective. And essentially you can get a few shareholders who do come together who these issues might not be necessarily a key highlight to them, but once they've been raised by LAP, they eventually actually agree, or there are ways that these votes can be passed through, and you do have these companies now having to report on it. So I think the classic case is probably companies like BP or Barclays, where for a long time they have been quite resistant, but the fact that they're now having to do reports or produce reports on climate strategies, that's based on the engagement that LAP has done. So it's probably more looking at the lens of LAP over a longer time period, rather than this particular cycle. And as you see, as we bring it every quarter, the performance is always different. Sometimes they have 100% where all their resolutions kind of get through. But sometimes, yeah, it is difficult to do so, especially with companies. And I think now they're at a point where they're engaging with companies that are not as keen on this. So there's probably stronger opposition from the management in getting these resolutions through. But I do think, especially on their website, you can see a bit more about their work. They are doing some serious work, and their engagement does actually prove to be effective over the long run. But obviously, I'm willing to take any other views for those who encountered LAP if I have not expressed it as well.
Councillor Bevan.
Well, I will just say a few words in support, because it's not just this. The LAP executive also meets many of the company directors and chief executives, and a lot of that is in person. And just recently, they've become involved with some of the mining companies. I don't know if you remember some of these mines, the water dams have totally collapsed and destroyed thousands of homes in South America and killed people. They're now involved with those companies and their boards and their chief executives in trying to force those companies to compensate and recompense those people. So it's quite a wide range of things they get involved in. And it basically just means that all the funds together are pushing in one direction. And if LAP wasn't there, every council fund probably wouldn't be doing any of this. There wouldn't be that type of influence. So, and it doesn't cost as much a year. Tim, how much is it a year?
It's not a lot. It's under 10K.
Okay, shall we note the report and go on to agenda item 13? If you would like to do that, Tim.
Right, item 13. So item 13 is the risk register. This again is a standing item that we do bring to the committee at every meeting. The focus for this particular meeting is on governance. I think at the last meeting, it was investments. Further to comments at the last meeting, I think members did ask for a more comprehensive or fuller version of the risk register, which we have included. The only caveat is we've not included the full register, but we are going through all the process in terms of when we update one, we'll then add that onto the summary sheet. So there are some sort of risks where I feel maybe the committee and board have not seen those in a while and have not had the opportunity to comment. So would like those to be included first before we have them in a full version of the report. So that's been provided, and hopefully I can welcome some comments in terms of whether that is satisfactory or if there's more information that members would like to be included in this particular report. In terms of section 6.5, where we identify the key risks at the moment, some of the risks remain from the previous version. So this just includes all the risks that are in the risk register. So on the investment side, we've got high inflation, which is still proving to be persistent, and some of the actions that we are looking to in terms of managing and mitigating those risks. Then there's also the increasing risk of a downturn, which is primarily driven by the Bank of England increasing interest rates, but now there seems to be different issues as well that are playing into that. So that's something that will be a key consideration to the committee and board. And as Alex sort of mentioned earlier, the way our portfolio is positioned, it's quite diversified, and there's a lot of defense within the portfolio. So there isn't any urgency for us to move or do anything differently at the moment. But it might be something for members to just consider whether what will be the risk if we do go into a downturn for a prolonged period of time. And then the final one I've just added is the delay, some of the risks around the delay in the publication of the statement of accounts. And just to note to members that we are still trying to meet that deadline. And as discussed, we have a plan in place as to how we're going to provide that information to the Pensions Committee and board going forward. So that's all I wanted to sort of bring to the attention of members, but happy to take any questions on any aspect of the risk register.
I want to raise
Mr. Brown.
a risk which has actually been reduced, mitigated. One of the biggest risks we were discussing over the last few years has been the lack of continuity on this committee and their expertise. In that sense, I just like to welcome the return of Councillor Bevan, Councillor White, who bring real expertise back. I don't know how you feel about now we've got 3 chairs. You're chairing a meeting with your 2 predecessors, but I think it's good for the committee, and I'm sure all the other councillors are wonderful, but we haven't had a chance to develop the expertise yet. So I think that's a real positive. We've been trying to do that for a long time.
Can I say as well, I think actually having you guys on here, you're permanent members, aren't you? So that's a continuity in itself.
It wasn't intentional.
Have any other comments? Shall we go on? Can we note this and it says here the area of focus for review at the meeting is governance. Say anything about that?
No, it's just to say that the risk register is based mainly on governance risks, which I think Keith has all commented to, one of the ones that has been reduced with the mitigation and returning members.
Okay, can we go on to agenda item 14 then, forward plan?
Yes, so again, this is a standing item, and this helps us as officers inform the agenda going forward. So what we tend to do is we populate the forward plan, which is included in Appendix 1 to this report, which based on what we expect to be the normal cycle of the pension fund and its reporting, what we expect to be coming at the future meeting. So this is just to bring to the attention to members of what the next few meetings look like, and also invite comments on any items that may not be included in here that you feel would be important to bring to a future meeting.
Any comments? No? Shall we go on then to item 15?
So just on the same item, just again to point to members, and maybe if Fiona will update me on this after the meeting, is just the training needs assessment. If members haven't completed that, if you could, that will inform the future trainings that we can arrange for the Pensions Committee and Board.
Okay, thank you for that. And can we go on to agenda item 15, which is the actuarial valuation update report. It says the recommendations for this item will be considered in the exempt part of the meeting.
Yes, Chair, if it's okay, if we could go to the exempt part of the meeting. I am going to be introducing the this item, but we've got Hymans with us today to talk us through the assumption paper, which does contain some confidential information. So for us to be able to discuss the paper, openly, I would suggest that we go to the exempt part of the meeting.
Okay, does that mean switching them? No.
So if it's okay, we've just got 2 very small items left on the public agenda. So we can do those very briefly and then move to the exclusion of the press and public.
Is that agenda item 15?
So it's 16.
16.
And 17.
So New items of urgent business? No, and item 17 is dates of future meetings. To note the dates of future meetings, that's 22nd November, 23rd January and 21st March. And then we go on to item 18, exclusion of the press and public. And we will now be considering items 19 to 22, which contain exempt information. We'll be moving to exclude the press and public from the remainder of the meeting to consider this exempt information as defined under paragraphs 3 and 5, part 1, schedule 12A of the Local Government Act 1972. Is the exclusion of the press and public for these items agreed by members? If anyone has any comments or objections to this, please speak now. Otherwise, I will take this as agreed. This has been agreed. Thank you. That marks the end of the public section of this meeting. We'll pause while the recording of the meeting stops and we'll restart the exempt part of the meeting in a few minutes.